Lesley Tao here, and I'm joined by the wonderful Joshua Tharby, who's our property tax specialist / accountant. And today is Friday, so he's my friend on Friday today, and he especially made the trip to come from Peterborough to Cambridge so that we can talk about the latest news from the government. So massively what affects property is the stamp duty reductions and exemptions. So we're super excited. Welcome, Joshua.
Yeah, thank you very much for having me. It's a pleasure to be here. Yeah, definitely worth the drive to Cambridge. The first one since lockdown. Even spilled my shirt, coffee on my shirt on the way here, but that did not stop me. I'm here, nice clean shirt, and ready to give some fantastic content.
Joshua is on keto. He was just telling me about it. So that means he's going to become the Thor.
Yeah, that's it.
Of property tax accounting.
Yeah, that's it. Protein gains. The strongest accountant.
I know. I was just telling him that I can't do keto, but I am working on it as well.
I think it's just easy because it's you can't eat the nice food, so it's quite easy to have a biscuit, a croissant, something like that as a snack. Whereas if you're on keto, it's just flat out ban, so it's easy.
You just have, what do you eat? Have a bit of chicken?
Yeah, that's the best bit about it, you don't need that much.
Hey, eat pepperoni?
Yeah, pepperoni is good.
Yeah,
salami, all cooked meats, chicken, veg.
Does it give you heartburn?
No, quite the opposite.
Is it?
Yeah, usually
so you're feeling good?
Yeah, I feel a lot more energy, a lot easier to wake up in the mornings. 5 AM, I'm out and ready for the day.
And how much weight have you lost?
So far I've lost, I think about 8 kilos.
That's loads.
Yeah, which isn't too bad.
I've been working out for over a month now, and I think I've lost 2 kgs.
This is all since the start of lockdown as well.
Wow.
So the first couple of weeks of lockdown, I was taking it easy. I thought, I was just eating all day. And I thought, you know what, just because gyms are closed, that doesn't mean we have to give up. And did a complete mindset shift and started looking at things a bit differently.
I know, and just so you guys know, before we get into the nitty gritty, we were talking about how we have been working on automating our businesses, and systemizing, and we're actually both on the same page with our businesses, right? Doing very similar things, because what is the thing that we actually don't enjoy the most? And this is the same for both of us.
Working with staff. Staff, the biggest headache in a lot of businesses. People think I'm an accountant, a property tax accountant. Yeah, I am that, certainly. But first and foremost, I'm a business owner, just like you guys. So yeah, me and Lesley are talking about kind of how staff are a big issue in businesses, and then it's nothing that ever gets fixed. You simply kind of tolerate it until you get a manager in who then deals with staff for you, and then you have the same issues again.
Yeah, so we've been sort of downsizing but automating. So we get sort of VAs to do other roles, and I think it's great because it really has made our businesses more slimline.
Yeah.
Hasn't it? And they get their jobs done. Yeah. And it's easier, isn't it?
Yeah, I definitely prefer it. I can't see it. I'm going to go back to the old way of working.
Me too.
Really, the amount of work that I had to do to maintain the previous way the business was running is just a lot more than it is now. Really streamlined, really efficient, and it's just a much more endurable way to work because it frees up a lot of my time.
Fantastic.
If I had staff in the office now, it'd be a lot more difficult for me to just drive to Cambridge to spend the afternoon.
Look after them, instruct them, tell them what to do.
Whereas now we've got overseas staff, right systems, right automation, which means that I can spend time doing things I enjoy doing and ultimately add more value to the business.
So if you're a business owner and you haven't done it already, me and Joshua's advice is automate,
yeah,
right?
That's it.
Okay, sorry, adding all the sound effects in. Sorry, editor. Yeah, okay, well, let's get down to business because I think it'd be useful to have a recap of, let's start with stamp duty.
Yeah.
So the stamp duty changes that were announced yesterday. So take it away, Josh.
Yeah, absolutely. So yesterday in the summer statement, I think it was called, summer statement, stamp duty for your homes under £500,000, so £500,000 threshold. It's been moved to that, and broadly it means the vast majority of people that are moving properties, buying houses now, will not pay a penny of stamp duty. I think 9 out of 10 people won't pay any stamp duty at all. This is in place to the 31st of March 2021. However, it's not all good news for investors really, because it doesn't apply as much as it should do to investors because you've still got the 3% surcharge, which will apply on properties where it's your second home or your limited company purchasing.
So So this is where me and Joshua have a little bit of disagreement, because I think, I'm an investor, I still think it's great news, only because the surcharge used to be 5% up to $500,000, but now it's dropped to 3%. Yeah, but only because I bought 2 properties in Cambridge last year and they were both like about the $500,000 threshold. So I literally paid out like 30k or a bit under in terms of stamp duty tax on both properties. And if I brought the same kind of value of property this year, within the next 8 months, which I am considering doing, then my stamp duty tax is halved, so about 15,000.
Yeah, absolutely. Yeah, I've got it written down here. So for a £500,000 property, previously you'll pay £30,000 in stamp duty, whereas if you were to complete now and between the 31st of March 2021, it'd be just £15,000. So half your stamp duty.
So, but it's interesting because it's always good to have different opinions. So for me, I'm like,
as an investor buying kind of expensive real estate like that, that's great. But the vast majority of people don't buy properties that expensive.
That's true.
If you think most places in Cambridge, London, all these are really expensive areas, most people are buying it up north, Sheffield, Leeds, County Durham, places like that where it's £100,000 a house, £150,000 a house, because they're the ones that are going to give you the best yields and cash flow really well. So that's where a lot of people focus, and for ordinary investors purchasing those kind of properties, they're not massively impacted or get any benefit from it really.
So how much do they actually end up saving?
Yeah, so if you're buying any house £125,000 or less, there's no saving whatsoever. If you purchase a house for £150,000, there's a mere £500 saving on your stamp duty bill. If you buy a house for £200,000, previously you'll pay £7,500 of stamp duty, and now it's just £6,000. There's a small saving in there, but it's not really enough to make a previously unfeasible deal now worthwhile.
So it's so interesting when Joshua breaks down the numbers like that, because obviously I invest down south, so I see a massive saving there. But when you break down the numbers of, these are the property prices, Midlands and up north, and these are the numbers, and what are they saving? So I'm a bit shocked that at one point they're not even saving anything. Yeah,
exactly. Houses where I'm from, so Peterborough. You can buy a 3-bed terrace house there, which is a perfect investment opportunity for 100, 150. So for me, it's nothing to get excited about. And if anything, I feel that because it's for first-time home buyers, it's now more affordable for them to buy it. There's no stamp duty to pay, and people moving a house. It's going to be more difficult for me to get a good investment property because they're going to have the amount they would have spent on stamp duty as an extra amount to offer to the vendor.
I see. Okay. And what about companies, Joshua? How does it impact if you want to purchase an investment property for a company?
Yeah, so for a company, it's treated the same way as before. So you've got that 3% surcharge that applies. So if you're purchasing any property in a company, you've still got the 3%, which can apply up to £500,000. So if you're buying a house for £100,000, as a limited company, you'll still pay that same £3,000 of stamp duty as before.
All right, and I had a question from a YouTube subscriber. So this is to Juan. I hope I'm pronouncing your name right, and thank you so much, Juan. This is from Juan Folga Colomer. What a cool name. Lesley Tao, hi. Congratulations on your video. I'd like to know how this affects buy-to-let investors. So if I were to buy a £250,000 property via a limited company between today and the 31st of March 2021, I'll be looking to pay £10,000 in stamp duty. So I think he's applied the
so £10,000. So what is done there is calculated using the old rates.
Okay.
So £10,000, that's correct. If you'd have purchased it any time before the 8th of July, £10,000 is the amount of stamp duty you'll pay. However, now it's going to be less than that. It's just a 3%, which means you actually saved yourself £2,500 in stamp duty as a result of this, which is not a bad saving at the end of the day. So if you've already got that property secured, you're ready to complete, £2,500 saving for completing between now and the 31st of March is a good outcome.
Yeah, so what would be the stamp duty I'd be expected to pay either before today or after the 31st of March? So if it was the old rules.
Old rules, £10,000.
Okay, I got it wrong. So I thought it was 12,500 based on 5%. So it's okay. It's always good to be corrected by the professional. Okay, so I think he's just trying to figure out how much the savings are, but I think the savings, as you said, is 2,500 because under the new rules, then he'd be paying 7,000.
7.5, yeah. I think the reason you got the number slightly wrong there is because it's a tier system. There'd be the first 0 to 125,000 at 3%. Then it's just 125,000 to 250 that's taxed at 5%.
Yeah, you're right. Sorry, Juan, I put the wrong. I didn't calculate the first tier into that. But so you still get a £2,500 saving, and then he goes on to say, I'm trying to work out whether it's worth to remortgage my property, even if it means paying an early payment penalty fee so I can release some equity and make the most of my stamp duty relief, or just wait until I end my current loan contract, which is September 2021.
Yeah, absolutely. Yeah, that really does depend on the ERCs that you face, but on the face of it, I can't see that being worthwhile because here, at the very most, we've got a £2,500 saving. And now, because everyone's aware of this, estate agents, I received many emails yesterday saying there's a stamp duty saving, so they're going to try and reignite that interest in the property market. So now, if someone else is interested in that property, they can bid £2,500 higher, so property price is just going to increase that tiny bit to account for that stamp duty saving. So I don't think remortgaging your property and releasing equity, especially when you've got ERCs like you're going to pay, I don't think that'd be a worthwhile exercise here unless you're looking to buy other properties anyway and it makes sense.
Thank you, Joshua. So I've got another question. Do you think that landlords are going to be putting up the purchase price as a result of these incentives?
Yeah, so I think vendors will, essentially, because naturally property it's all supply and demand related.
Sorry, I'm an investor. So an investor, recession is a good thing because it's an opportunity to go and buy properties at a big discount.
Yeah.
But if that's not happening,
that's exactly
where's my discount?
That's exactly why the government have put this into place. There's a massive giveaway. The cost of slashing stamp duty is going to cost the government, I think billions of pounds. So the reason they're doing this is to stop a recession. They don't want the housing market going into recession. They don't want house prices dipping. I think the Bank of England predicted a 16% fall in house prices. So what they've done is they've put these measures in to keep people moving house, make it more tax efficient so that house prices don't fall.
And do you think what's the impact of this though? Because do you think that would halt the recession so the economy is stimulated so much that we get back to normal, or do you think it's just a delayed impact?
I think definitely a delayed impact. The worst is yet to come, really. Hospitality and things like that just starting to open up again. They're putting a lot of effort into trying to stimulate that with a VAT cut that we're going to cover shortly. But essentially, it's a ticking time bomb. They've even introduced a bit where if you bring back furloughed workers, they'll give you £1,000. But fundamentally, I think it was just a moment ago, Boots are cutting 4,000 jobs. There are a lot of nationwide chains that are cutting jobs, closing stores. And no matter how much stamp duty savings there are, all of these are going to have a massive impact and result in people being massively unemployed. And as a result, there will be a recession.
Okay, Joshua, thanks for that insight. I was like, where is the recession that I've been waiting for?
I think
that sounds a bit bad, doesn't it?
Early next year, Q1, Q2 next year, that's when all of these kind of efforts have been put in by the government are going to finish. The stamp duty, that saving will finish 31st of March, I think it was. That will finish. And also, when we get at the back end of this, that's when we're going to start thinking how we're going to repay all of this money that's been pumped into the economy. So there might be tax increases that are coming, which won't help with the recession. So there's a lot to come into. So people now that are investors, just sit tight unless it's a really, really good deal and you can factor in a 10 or 20% reduction in price. Sit tight, hold your cash, because I'm pretty sure there's a big opportunity coming.
Fantastic, Joshua. That's great. I love that. We've got some other things to talk about as well. So that's sort of stamp duty out of the way. Yeah.
So what else we've got? Sort of VAT. The VAT rate on hospitality and the leisure industry as well, which includes serviced accommodation.
Hey.
Yeah. That's been reduced from 20% to just 5% now. So it's effectively, give or take, a 15% price cut, which makes consumers much more likely to now spend their money on that as it's cheaper and there's less money going to the government. So that's due to kick in, I think it's the 15th of July, off the top of my head. The VAT rate's going to be reduced. So if you're a takeaway, restaurant, leisure attraction, accommodation provider, you won't have to charge the full 20%, it's just 5%.
I still think, so this is in line with what you've been saying about a delayed recession, that there's a massive impact on job loss.
Yeah.
Yeah. So no matter there's all these incentives, pay to eat. Not pay to eat, but they'll pay you a discount in August.
Kind of get 2 for 1 Monday to Wednesday, I think it is. Yeah.
So, however, you're right. I think there's still going to be an impact on jobs because the housing market can't employ everybody.
Yeah, exactly that. And even then, with all of these efforts to make people want to go out and eat again, people just don't want to. People don't feel safe. A lot of people, especially higher risk categories, that they don't feel safe going to a restaurant. On Facebook now, when I announce these changes, people say, no, I'm still not going to go out. I don't feel safe. And most people that I've spoken to are going to be a bit on edge until there's a cure found for the coronavirus. So naturally, until then, that point of time, hospitality is still going to suffer. And the only way they're going to do that is to cut costs, which means redundancies.
Wow. Well, Leicester's already experiencing a lockdown.
Yeah.
And I was looking at the news yesterday. US is going in some states, they're going through a second wave as well.
Yeah. Where
numbers are still really high. So I predicted though, when at the beginning of the year, when it started in China, in Wuhan, I predicted that if globally we were going to be impacted, it would at least last until the end of the year.
Yeah.
Yeah. So let's see.
Yeah, I think that's very realistic. End of the year.
That's what I've been working towards, like our businesses and family, like to make sure that we've got enough to see us through for at least 1 year.
Yeah, I think that's quite sensible. I can't see the world getting back to normal as it was until there's a vaccine found, really. Even though you used to have a haircut, the person was wearing a big face shield, gloves and all that kind of stuff. It's a completely different way of life, and there's no way that's going to change until people feel safe to go out and act as they usually would.
Wow. Big changes for us, right?
Scary times.
It's a little bit. So everybody, despite business, despite property, despite all these different incentives, main thing is keep safe.
Yeah, keep safe, absolutely.
Yeah. Right. Joshua Tharby, thank you so much for today. I think, is there anything else we want to cover? We've got one. Do you want to talk about the eco build?
Yeah, eco build.
I put voucher. So the government are giving incentives to people that want to renovate their properties.
Yeah, so the eco build, essentially what that is it's a voucher offered by the government. I think it's up to £5,000 and it does apply to landlords as well. And essentially what it's aiming to do is help people go green on their homes, which can include the replacement of eco-friendly boilers. So it's my understanding that if you're a landlord and you are replacing a boiler with an eco-friendly model, you might actually get some money from the government to help you do that. So it's a great time to be renovating properties, replacing boilers, and doing it at a cost that's subsidised by the government.
That's really exciting.
Yeah. It really is.
Yeah, brilliant. So that's the latest with the property related news. And guys, thank you for joining us. Me and Joshua are going to do another video on the bounce back loan, so make sure you are subscribed. And if you have any questions for Joshua, please drop it in the commentary below. And if you're liking interviews like this, make sure you are smashing my like button, because it really helps with the YouTube algorithm, and I really appreciate it because it'll get us climbing higher and more visible, and obviously that will inspire me to also make some more great content. All right, thanks everybody checking out. Bye. Joshua, so we've got one last question from Miss Marla Gill for you. And this is quite an interesting one, actually. So Marla's question is on the buy-to-let stamp duty.
Yeah.
And she says, if I buy a 3-bed residential, but I plan to turn it into a 5-bed HMO commercial entity, would the stamp duty still be applicable? I wasn't sure from your mention of stamp duty reduction for buy-to-let, but not commercial yet.
Yeah, absolutely. So for stamp duty purposes, that's still going to be a residential property purchase, so you'll pay it based on the residential use when you purchase it. So if you purchase it for £250,000, you'll pay your 3% stamp duty now on that £250,000. Very rarely do HMOs ever get any kind of commercial valuation. It doesn't really come into it for stamp duty purposes. Sometimes if they are separate dwellings, you potentially get multiple dwellings relief, but that's something for an entirely different video. At the moment, it's the 3% stamp duty you're going to pay on that, on the amount you purchase it for.
I think from what I understand, just to break it down, for stamp duty purposes, HMOs are regarded as residential properties. Okay, and I think the reason why, Marla, you're thinking it's commercial is because of the lending. So under lending, sometimes they categorise HMO.
Yeah, I think sometimes you can get a commercial valuation for HMOs.
So that's good to know. Thanks, Joshua. So guys, we're checking out. This is like how many takes for the checkout. We're checking out. Thanks for joining. If you like this kind of video, make sure you subscribe, because Joshua and I are going to be doing another amazing video on the frigging bounce back loan. Frigging's not swearing, or is it?
No, that's fine. That's
okay, I'm cool. And how to extract your money, because I think that has been the biggest grey area or questionable area. How you can extract your money in the most tax efficient way to then go invest in property.
Yeah.
Right?
Yeah,
I'm getting asked that all the time. So make sure you subscribe, because Joshua's going to be on My Friends on Friday, basically. So I'll probably put Joshua on next Friday as well to talk about the bounce back loan. What do you reckon?
Yeah, absolutely.
Yeah. And Joshua also has his own YouTube channel. So if people wanted to come and they like the content and they want to see you a bit more, how can they find you?
Yeah, absolutely. So Joshua Tharby on YouTube, YouTube/Joshua Tharby. That's my YouTube. Like any videos there, do subscribe. I'm going to try and put much more out there, especially tax, business, property, wealth related stuff. And if you've got any questions, just drop them in a comment and I'd be more than happy to help.
Lovely, guys. So I will drop Joshua's details in the description below, and make sure you're smashing this like button if this is a video that you like seeing, so I know, and it really helps the YouTube algorithm. All right, thank you. Bye from us.
Bye.
Bye.